I'm building a $1 million portfolio publicly and sharing every step of the way. Facebook, or Meta, just released some huge news regarding its Metaverse platform. We're going to dive into that news. We're going to look at the valuation of the stock today and future growth expectations. And then I'm going to share some of my thoughts on whether or not I think Facebook is worth considering as a buy today. And let me know in the comments whether or not you own Facebook and if you think this news makes it a potential buy for you. If you've watched my videos before, you know I always lead with my real money portfolio. So let's jump into it. The market's currently closed, so we're at a current value of $21,310, and we have contributed $22,000. As a reminder, over the next 10 years, we're going to contribute a total of $370,000, and I'm going to share every step of the way here. And my newsletter subscribers get notices first of everything I'm going to buy before I buy it at austin.substack.com. We're down about 5%. The market's going to open here in a few minutes, so we'll see these numbers change. And we'll check back on them. I don't care what happens on a day-to-day basis. That's not how I invest. But I do want to share this openly and transparently so you know who you're watching and what you're listening to. In this portfolio, I've got it broken into slices of growth stocks, dividend stocks, and crypto. Crypto is about 6%, dividend stocks are about 22%, and growth is about 71%. Those will change over time. Right now, I think there's a lot of great opportunities in growth stocks because of the quality of their businesses and how much some of them have sold off, which is why I have so much allocated in the growth bucket. So when I'm thinking about Facebook, if I consider it for this portfolio, then it would be in the growth bucket. So that's the mindset that I have for the stock. Let's jump in to the news about Facebook, or Meta, today. I don't know if I'll ever call it Meta. Late in the day yesterday, the company released a news release, or a blog post really, saying that they are testing new tools for Horizon World creators to earn money. Horizon World is their metaverse world. And the main takeaways up front is that they're testing a way for creators to sell virtual items and experiences within their worlds. We're also testing a Horizon Worlds creator bonus program. They released a 20-minute video that's super awkward with Mark Zuckerberg and a few of his metaverse friends talking through, they're actually some of the creators on the platform, talking through what they're doing on the platform and some things that the creators would wish for. Feels kind of scripted and really awkward, and the graphics are obviously horrible. Initially, when I look at these graphics in the metaverse, I'm like totally put off by it. I'm like, that's not a real thing. It's never going to work. The mindset that I actually have, though, when I think about it, is that the graphics are almost the easiest part. Once they scale the model and they get the supply of the creators providing the events and the different things to sell, and the demand of the people going there through their VR headsets, the Oculus headsets, once they get that kind of two-sided dynamic or marketplace worked out, the graphics are super easy to improve extremely fast. And so as silly and goofy as these graphics look, that's really, if anything, a potential benefit or tailwind in the future versus a risk. Because if people are using it right now, then with good graphics, they're going to be prone to use it a lot more in the future. Meta is beginning to test several new tools that will enable creators to experiment with different ways to monetize what they're building in Horizon Worlds. In my opinion, this is the start to building out a platform, much like being able to sell on Facebook or on Instagram, or even in a storefront on Shopify. They're building that in Horizon, and it's going to take time. Right now, the revenue from this, and over the next probably couple years, the revenue from this is going to be, very incremental, not make a huge difference to the bottom line or the top line of Facebook. But this isn't about right now. It's about the future. And what we need to pay attention here is ideas about the vision of what they think they're going to build this into, and whether or not that's something that we believe and want to invest in. These types of tools are steps towards our long-term vision for the metaverse, where creators can earn a living and people can purchase digital goods, services, and experiences. So they're trying to change gaming, or the metaverse, from just this thing you go and potentially waste your time or your life, to where individual creators can build very real businesses and livelihoods. Meta does have what they call a Horizon Creators Fund, which they announced in October. And they use that to provide resources to Horizon World creators. And they're going to continue to work with the creator community and test and learn. So it's almost like a grant program to get activity and incentivize people to actually spend their time building in this world so that they can test things and see if buyers are willing to come in and actually pay for things and go to events. We're beginning to roll out a test with a handful of creators that will let them sell virtual items and effects within their worlds. For example, someone could make and sell attachable accessories for a fashion world or offer paid access to a new part of the world. And so in this example, I'm not sure how well it shows here, but there's a secret temple key that would unlock new access to a new part of this world for $5. So this is potentially some exciting news. It really isn't going to impact in a big way Facebook's revenue or earnings over, the next, say, 1 to 2 years. But if this works, then it potentially becomes transformational for Facebook's business, much like the move from desktop to mobile. And Facebook has already announced in previous earnings reports their commitment and the capital commitment and how much money they're investing in building this metaverse. And they've received a lot of criticism, and the stock has been hit really hard. What we have to do as investors, and what I'm doing as an investor considering Facebook as a potential position in my portfolio, is I have to think through what is the probability of the metaverse and Horizon specifically for Facebook being successful. What does that mean for the future earnings and revenue potential of this business? And is that, to what extent is that factored into the current stock price? All right, so you know what we're looking at if you've watched any of my videos. We're looking at fast graphs. And a quick overview, this orange line represents what the PE ratio would be if the price to earnings was equal to the earnings growth rate over time. And so we see here that since 2011, adjusted earnings growth has been 30%, a PE of 30. The blue line is the normalized or the average PE that Facebook or Meta has actually traded at over its history. And so we could see on average it's traded a little bit above its earnings growth rate. But I don't really think that, the last 10 years are probably the best estimate, because Facebook has gotten so large that I don't think they're going to grow earnings at 66, 101, 29, 86, and 46% like they did in the past, now that they're a pretty profitable company. So I want to shorten that up to get a little bit of a different perspective to think about what Facebook has been at scale already and what the future might look like. We go to the last 7 years, which it's actually 7 years including the next 3. It takes us back to 2018. We can see that back here, the PE ratio, this was in 2018, the PE ratio was 16.6. That was about, other than now, when the sentiment was the worst around Facebook and its future. So we could see right now the blended price to earnings ratio is 16. So very similar to back here, right? During COVID, it didn't even get down this low. During the COVID drop, it got down to 20. The earnings growth rate over this time period has been 15%. So this orange line represents a PE of 15. The normalized or the average PE, like we talked about, has been 26. If we look back to when the sentiment previously was the worst about Facebook, we just look at it getting up to a PE of 25. It's a little bit under its normalized price to earnings ratio. This is taking us from 12/21/2018, when the share price was $125 a share, to 6/14/2019, so about 6 months. Over that 6 months, that total return was 45%, which on average over a year would have equaled 117% annualized return. So when I see where Facebook is trading right now and the sentiment around it being so negative right now, and it's back down to a PE of 16, what does that look like if Facebook can get back up to that normalized price to earnings ratio of 26? Well, if it happens over the next 8 months, then you're looking at a total return of 52% and an annualized rate of return of 79%. If it happens by 2023, again, total return of 80% and an annualized rate of return of 40%. And if it happens out to 2024, then we're looking at 105% return and a 30% rate of return. That's based off current earnings expectations and a PE ratio of 26. So let's adjust that a little bit and let's talk about what those expectations are. Over the next 3 years, the adjusted earnings growth rate is expected to be about 7.3%. But that's taking into account a drop in earnings by 10% for 2022, and then the next 2 years growing at 17 and 14%. So I would use kind of the average of these two to think about what a normalized earnings growth rate could look like over the next several years. And so we'll call it 15, right? 15%. And if we see that's about what it's been over this time period and is traded at a normalized price to earnings ratio of 26. If earnings is growing on average at about 15% per year, it's not ridiculous to think that the PE ratio could be 26. But we'll be a little bit conservative with that and we'll just bring it up to 22. And so even at 22.5, then the annualized rate of return would be 22%. The S&P 500 on average has returned, 8 to 10% per year. So you're looking at potentially doubling the return of the S&P 500. Let's take it down and let's say the PE ratio doesn't increase at all and it actually decreases a little bit to 15 from here. That's about a 10% reduction in price to earnings ratio from here. You're still not looking at a negative return. You're looking at an annualized rate of return of 5.5%. That's kind of the lower end of the range that we're talking about here. It could certainly be worse, but again, sentiment is about as bad as I ever remember it in Facebook right here. Even at that kind of bear case or worst case scenario, you're looking at an annualized rate of return of about 5.5%, 6%. And so I think a realistic range of expectations for Facebook could be over, through 2024, somewhere between, a 5% annualized return. That would be a total return of 15%. That would turn $1,000 into $1,150. I was a criminal justice major, so my math could be off. Two, up to a total return of 73%, which would turn $1,000 into $1,730 over that time. So just from looking at the fast graph and kind of the fundamentals and expected growth of the company in those return situations, Facebook is a very interesting company to me, and it's definitely worth more research. Let's jump into Morningstar, which is a pretty conservative company, has the fair value of Facebook at $400 and its last close price is $216. Well, that makes it a 5-star stock in their opinion based on the difference, and they say it's at a 46% discount. They call it an economic moat of wide, and they call it a capital allocation exemplary. Another thing I love to jump into is Seeking Alpha. Facebook is actually rated a buy, but what I want to show here is just kind of how that rating has changed over time, and really back since 2019, it's been a buy, which is a light green here, and then it was a strong buy for a little bit. And it's still considered a buy. The average price target is 327, which is significantly higher than it's at right now, with a high of 466 and a low of 195, which even the low is above Facebook. But again, just because it's below these measurements doesn't mean it's necessarily a good buy. If the business is deteriorating and Meta doesn't work out and they lose advertising dollars and they lose users, then things could go much lower for Facebook. And look at this, wow. Over just the first 30 minutes of the market, now we went from down 5% to a positive return on the portfolio. So that means, the portfolio is up 3% today. So let's see what's driving that. On a one day, the growth monsters bucket is up 4%. Dividend growers are up 1%. So that's a pretty strong day for dividend stocks. And crypto is up 3%. I'm not looking at the entire market, but I'm guessing the whole market is up. Again, I don't trade on a day-to-day basis. This is a long-term investing channel, and we're building the habit of being in the processes of being long-term investors. That's what's wonderful about this is we don't have to stare at the market every day. But here's a portfolio. And so CrowdStrike is leading the charge today, up 7%. GitLab is up almost 5%. Snowflake is up almost 5%. Monday's up almost 5%. So this is a growth day, right? Growth stocks are rebounding. That's awesome. Great. Again, nothing's changing there. But what I want to highlight is, hey, we got CrowdStrike here. And let's jump over to the dividend bucket. What you don't notice, Facebook's not in my portfolio. So big surprise, I don't own Facebook. I'll tell you if I plan to buy it or how I'm thinking about that at the very end. So just stick around for another minute. We'll jump through the dividends. And hey, look at that. Lowe's today up 2%. It's my largest position in the dividend side. Advance Auto up 1.2%. So great day all around. It feels great when your stocks are going up, but remember, mentally, we actually want our stocks to be down or flat while we're building these portfolios up, which I'm building this portfolio up every month and every year and sharing that here. So stick around, like the video, subscribe, and so you don't miss an update. What I want to show is this is my email newsletter, austin.substack.com. There's a free version. There's also a paid version for the deep dives if that's what you're interested in. But I provided an update. This was last week of what I was buying and some more detail. And I said I was adding $1,500 to Lowe's. And I was adding $1,500 to CrowdStrike. I shared this with the subscribers before I bought those positions. And so that's what I do with the newsletter if that's something you're interested in. And quickly, let's jump over to Common Stock, my favorite investing community on the internet. What I love about it is that it allows you to share research, find research, and also connect your account securely. And so for me, it allows me to show you publicly the performance of my portfolio. You can even compare it to the S&P 500. You can see the portfolio is up 5%. The S&P 500 is up 3% since over the last month. And the NASDAQ is up about 2.8%. This is a short time period, so I'm not bragging here. I'm just showing you kind of the platform. Shows you the positions, and then you can also see the trades. There's tons of other people on Common Stock and great research shared. So if you enjoy this type of content, and whether you're an investor or you're a little bit a long-term investor or more active, I think you'll find things you enjoy on the platform. There's a link to all of the stuff I talked about, my newsletter, Common Stock, my portfolio on M1. There's a bonus if you start an M1 account. All those links are down in the comments. You stuck around to the end. So the great reveal. What am I thinking about Facebook right now in terms of, is it a good buy or not? I don't own the stock, but I think right now is a very opportune time to buy Facebook. I have not decided that I'm going to. Again, if I decide that, the first people that will know is my email newsletter. And then of course I'll make a video about it here. But it's certainly worth doing more research. And what I have to find out is, what does the revenue and earnings opportunity look like for the metaverse over the next, say, 5 years? And that's very hard to figure out, but we're going to continue doing the research, and I'll report back here and share videos.